Mullen can deliver 300 vans by 30th November according to an agreement, and if true, this will be a big achievement for the company. So should you buy the stock? Sit tight as we go through the agreement along with recent news as well as my chart analysis and price prediction. But before we do that, subscribe to our channel Stocks 101 for regular stock market updates. Mullen had signed the deal with Amazon's delivery partner Delpac Logistics back in August this year, and the deal stated that Mullen would sell 600 cargo vans to Delpac with the time limit being 18 months. The price of purchase and other such details were not mentioned in the contract, but regardless, it's a good sign for Mullen as now their vehicles will finally hit the road and start making a presence in public. This deal, if completed, will give Mullen the same trust as Rivian because of the Amazon factor involved, but any information specific to this delivery has not been announced. Also, if it gets cancelled, that would dent Mullen's reputation a lot. In our opinion, if this information is true, it will be the first step in taking the stock price to greater heights. With all that in mind, let's analyze the charts. So as you guys can see right here, we're now in the 1-day chart for MULN yet again. And first we'll analyze the 1-day chart, then the 1-hour chart, and turn it off, we'll get to the 5-minute chart. But right off the bat, we can see that my prediction for yesterday did not go all that well. Right, I already told you in my previous video, which was posted on Friday itself, that the stock would probably go down and then recover and give a green candle on Friday. But as you guys can see, that does not happen. Instead, we got a big red candle. Not exactly that big, but it's still considerably big, right? We went from a price of 0.2815 pretty much to a price of 0.269, indicating a 4.4% fall. Now, of course, there are a few factors to consider, right? First one is this somewhat of a pin bar candle that we made over here, right? So this kind of already indicated that a bearish trend was up front, but I personally was expecting a small recovery because I just did not think that we would get a straight red week, right? I was not expecting the fact that we would get from Monday to Friday every single day would be a red candle, right? I was just not, I was just not expecting that. But we got it anyway, so we'll have to deal with what we have now. So on Monday, well, I'm personally expecting a gap up, right? So I'm expecting a gap up somewhere around 27.50, right? Around this range, 27.50 under 28 cents. So that should be a good gap up. Once we get that, we'll probably continue the fall, right? Of course, we will get a green candle that day, if I'm not wrong, right? So once that is done, once we got the green candle, right, we'll probably continue to go down because we will most definitely get a green candle at this point, considering the fact that we've been falling since an entire week, which of course is not that common, as I already told you many times, right? So once that is done, once we get a green candle somewhere around here, we should probably continue the bearish trend. But one thing which is rather, I won't exactly say it's bothering me, but it's a bit, what do you call it? A bit out of the ordinary, I would say, right? So we're not falling below the 25-cent range anymore. So that might, be an indication that the stock is finally, or rather the company has finally justified this valuation that it holds around the 25 or rather 26-cent range. And that is why no matter how much we go high, how much the stock rallies or how much it falls, we've just not been able to go below the 26-cent range since 7th November. So that's like, I believe, 2 or 3 weeks, right? Even, let's say just 2 trading weeks. So we've not been able to cross that level on the downside. Will we do it again? I personally believe that we will, but factors are turning my mind a bit, right? They're kind of changing my perspective on this because, as you guys can already see, as I already told you, if we don't break this level, how are we going to do that, right? So we might form a cup and handle pattern on the short term over here. If we get a green candle over here accompanied by another candle, which again fails to break the $26, or well, I'm sorry for that, 26-cent range. So after that, will we get a bull run? Not so soon, right? I will probably say that the stock might stop its entire, this bearish momentum, this bearish agenda, but I'm not exactly expecting a bull run at this point because, as you guys already know, the market itself is in a beaten up state, and so is Mullen, right? Of course, with the dilution that's about to come up from 1.75 billion shares to 5 billion shares. It's not exactly a bad thing in that sense, because if you look at other companies as well, even Rivian and other companies will have to dilute at one point in the future. So Mullen might be preparing for that in a bit, somewhat of an advanced environment. But I personally would at least guess that the stock will at least once go down, because most people probably won't understand that technical stuff. So does that make me bullish on the MULN stock? Most definitely in the long term. But for the short term, I'm rather skeptical, because I personally believe that the stock will go down, or at least it should go down according to my experience and intuition. But this support around 26 is just really bothering me, right? The support around 26 cents, between 25.5 and 26 cents, it's just really bothering me. So once that is probably crossed, then I'll be a bit more comfortable. So of course we have a higher range at 33 cents as well. So this should probably stop the stock from going up as well. But with that being said, I don't think there's much left to analyze the 1 day chart that we haven't talked about before. So let's quickly jump onto the 1 hour chart so we can see what exactly happened on Friday. So now that we're in the 1 hour chart, we can see that over here we we got a bearish indication, right? Why? First up, of course, we got a massive red candle. That's not the bearish indication. First up, we got a not first up, second up, we got a pin bar on the downside, indicating high selling pressure. Again, we got a buying candle, a green candle, which still indicated high selling pressure because of the wick on the upper side. Then we got another pin bar to the lower side, a red candle. The spin bar was followed by two red candles, and succeeding this bearish pattern, we got another pin bar. Even though it was green, it just indicated a lot of selling pressure because it was on the lower side. So it showed us that the candle started over here around 26.7, went all the way up at 27.8, 27.08, I'm sorry for that, and came down all the way to 26.8. So that was a lot of volatility on the short term, of course, and this should probably explain the fact why I'm bearish on the stock in the short term and why I believe that it will go down. But of course, as I already told you, 26 cents will be a bad support to beat for the bears. And honestly, it's a good game, right? It's a game of balance. Bears take their share, and once bears have taken their share, bulls will come and take their share, right? So both entities in the end will make money, but it all comes down to who will make more money and who will make money at the right time, right? Because you definitely don't want to be shorting the stock when it's close to the bottom. At this point, I personally would not short this stock at this price. I most definitely will buy under the 30-cent range. I've already told you this countless times. So with that being said, we only have one level to analyze here, or rather mark. So that is around 27.7, and of course $26 range. That's we've already discussed that. So with that being said, let's jump on into the 5 minute chart so we can see both the aftermarket and the original 5 minute chart. So now that we're in the 5 minute chart, we can see a lot more details, and it will you know एक सेकंड फिर से करते हैं sorry. So now that we're in the 5 minute chart, we can see a lot more details, and this chart will quickly justify my view of the short-term bearish trend. And first up, we'll have to see that we got a pretty definite bearish trend all the way up here, right? So we were making higher lows, and or rather lower highs and lower lows as well, right? Over here, over here, over here, and this was when we hit a reversal around the level of 0.265, so that's 26.5 cents to you. And after that, of course, you can see that we went up by a lot, but again, the bearish trend just did not seem to stop. We got resisted around 27.2, right? So I'm talking in cents, of course, so 27.2 cents. We got another double top around 27 cents, which is pretty obvious. Now, if we come over here, this is what will explain my view of the bearish chart. So let me quickly jump on into the extended trading hours so I can explain it further. Right, we can see that after we got the spin bar on the lower side, right, we had initially gotten this inside candle over here, which indicated some squeezed volatility, I would say. Right, after this, we got a gap up in the aftermarket, going from a price of 26.8 to a price of 27.3, right? That's a somewhat of a, I guess, 5 cent or something, right? So that's a 5 cent. Wait, was it 5 cent? Well, not 5 cent. Um, 0.50 cent gap up. And after we got that, the market eventually fell down to the same level. It fell down to 26.9. Now, this might be an indication that, we've kind of squeezed in all that we had. So we might actually get a green candle on Monday, right? Because we, of course, the bears have done whatever they could. So we'll eventually have to go down, or rather go up a bit, and hit at least the 30-cent resistance once before we can continue with the bearish trend. Because we, of course, did hit, well, stronger resistance levels. First up over here around 32 cents, also over here around 31 cents, right? So we'll have to and come down from these levels, of course, but go up from these levels and hit another resistance before we can proceed with the bearish trend. So if you ask me what's going to happen on Monday, as I already told you, we'll probably get a gap up around this range at 27.50, somewhere around there, right? Once that is done, we'll probably go up around 29 cents, I guess, somewhere around this range. Then we'll probably start with a bearish rally, right? It will take some time, but it will get, mixed up in this stuff. And that should be the point where we'll get indicated that the stock is ready for a gap down and finally an extended bearish trend, and that would be the time to buy, right? So of course, once the stock is ready to go below 25 cents or even 26 cents for that matter, which is the problematic zone here, that would be the time to brace up to buy, because then we'll probably get a lot of volatility on the lower side. Ending notes, am I a hater of the stock? Most definitely not. I personally love MULN, and that is why I make a video on it pretty much just daily, right? And you guys have been enjoying them as well. And on that note, remember that I could be wrong, so this definitely was not financial advice, and you should always do your own research before you trade. If, however, you enjoyed my analysis, be sure to hit the like button. If you did not enjoy it, be sure to hit the dislike button. You can subscribe to our channel, Stox 101, for more such videos. And as always, I will see you guys in the next one.